So today we will be seeing one example for bank reconciliation statement. Okay, so bank account as per books of Mr. G shows rupees 8364 as a balance at a bank on 31st 12 2001. That is, as per his bank account and books, the balance is rupees 8364, but it does not agree with the balance as per passbook. So that is why we are preparing bank reconciliation statement. Okay, so on scrutiny, following discrepancies were found. First, on 15 December 2001, the payment side of cash book was undercasted by rupees 100. Undercasted in the sense it was recorded less by rupees 100. Okay, check of rupees 131 issued on 25th December was wrongly considered as cash. So instead of check payment, the entry was passed in the cash account. So we have to rectify that. One deposit of rupees 150 was not recorded. One deposit of rupees 150 was not recorded in the bank account. Okay. So on 18 December 2001, the debit balance of rupees 1526 on the previous day was carried forward as a credit balance. So there are many errors which are been done in the bank account. The debit balance of 1526 on the previous day was carried forward as a credit balance of 1526 instead of debit balance. Okay. Of total checks amounting to rupees 11514 drawn in the last week of December, checks aggregating to 7815 were cashed in December. So out of total checks of 11514, only 7815 were encashed in the December. Okay, the dividend of rupees 250 collected by bank and subscription of rupees 100 was paid by bank, and the same was not recorded in the bank account of the books. Okay, one outgoing check was recorded twice in the bank account. Okay, so outgoing check was recorded twice in the bank account. The books of account are to be closed in this outgoing check amount is rupees 350. Okay, so this outgoing check of rupees 350 was recorded twice. Then the books of accounts are to be closed on 31st December. Prepare a rectified bank account as per books, considering all errors in the bank account and also including all the entries not entered in the bank account of the books. Considering corrected balance from above, rectified bank account, prepare bank reconciliation statement. So in this both in our previous example we had given both balance as per passbook and balance as per your bank account, but in this example we are only given balance as per your bank account, correct, and that too the balance is wrong, since there are many errors and rectifications we need to do. So first what we'll do is we'll rectify all those errors, and impact of those errors we'll put it in the bank account, we'll prepare a statement, and then accordingly we'll rectify that balance, and then we will be preparing a bank reconciliation statement. Okay, so this is a format statement showing rectifications and corrections in the bank account of Mr. G as on 31st December 2001. Since we are closing the books, we need to rectify the bank account. Okay, now let's start with the balance which is shown here. Okay, so what we'll do is put it as balance as per bank account. So whatever is the given balance. Okay, given balance. What is the given balance? 8364. So when nothing is given, we have to assume that it's a debit balance, correct, since it's a bank account. So 8364 is a balance, it's given here, right? Now we'll look at all the transactions one by one. On 15 December, the payment side of cash book was undercasted by rupees 100. So on 15th December, what has happened is the payment side of cash book undercasted, in the sense rupees 100 was recorded less on the payment side of the cash book. Cash book is nothing but your bank account. Okay, so cash book actually has a combination of both your cash account as well as bank account, that is known as cash books. So some of the people they prepare cash book instead of separate bank and cash account, they have a combined account, that is cash account and bank account. Okay, so that is a cash book. So the payment side of the cash book was undercasted by rupees 100. Okay, so what has happened is, we'll do a rough work here. Okay, now what has happened here is, see, error, rectification. Okay, we'll put it as like. Then let's see bank account. Okay, both are bank account to understand what it is. Okay, now let's assume that the balance in the bank account is 10,000. Okay, 10,000. Now what has happened is the payment side of cash book is nothing but the credit side. Okay, since the payments are recorded on the credit side, correct. So what will be the payment side of cash book was undercasted. So what has happened is, so there was, say, let's say there was an expense of rupees 200. Okay, says you have paid a electricity bill of rupees 200. So instead of recording 200, only 100 rupees is recorded. Okay, and what has happened, the rectification should be, instead of 100, 200 should be recorded. So now because of this, what has happened is balance is 9,900. Now here the balance is how much? 9,800. So since you have to rectify, what you have to do is, from current balance you have to reduce rupees 100. So I'll put it here, less undercasting of rupees 100 on payment side. Okay, so I'll put it as 100 negative. So I have put a bracket. Next, a check of rupees 131 issued on 25th December 2001 was wrongly considered as a cash given. So what has happened now? Let's see, error and rectification. Now again we'll take bank account balance of 1,000 rupees, 10,000 rupees debit. Okay, a check of rupees 131 issued on 25th December was wrongly considered as a cash given. That is, payment which was made by check was wrongly considered as cash given. So instead of, see, party account debit to bank account, the entry that was passed is party account debit to cash account. Correct. So instead of passing an entry on the credit side of the bank book, the entry has been passed on the credit side of the cash account. Okay, so in error, no entry has been passed on the credit side of cash book. Whereas rectification, what we need to do is, instead of passing the entry on the credit side of cash account, we need to pass the entry on the credit side of bank account. So on the credit side of bank account, we'll put an entry of 131, and since it was wrongly credited to cash account, we'll be debiting a cash account. So due to this, what has happened is, the balance, okay, the balance has reduced here because of the error. The balance should have been 10,000. Now since this needs to be rectified, the balance should be 10,000 minus 131. So how much does it come to? 10,000, 1,900 minus 30. So in 879,869. So to rectify this entry, what we need to do is, we need to reduce 131 in this. Okay, so here only I'll write check issued but wrongly considered as cash. Okay, and the amount will be 131. Right. Now the next one, deposit of rupees 150 was not recorded in the bank account. Okay, so now let's see what is the now here one deposit of rupees 100. How much is that deposit? 150. Now let's see the error. Okay, and rectification. Okay, again here we are taking a debit balance of 10,000 and 10,000. Okay, so one deposit of rupees 150 was not recorded in bank account. So deposit means what will be the entry? It has to be on the debit side of bank account. Someone has given the money, so bank account debit to party's account. Okay, party in the sense debtors or creditor. So in error, what has happened? Nothing is recorded. Whereas rectification, what we have to do on the debit side, we have to record this 150. So the balance here is 10,000. Now since we have to rectify this, add 150. So now what we'll do is we'll be adding 150 in our statement. Now we'll add this 150. Okay, so in statement what we'll do, additions we'll put it here. So add deposit not recorded in bank account. Okay, how much it is? 150. Okay, now the next entry, that is transaction number 4. On 18th December 2001, the debit balance of 1526 on previous day was carried forward as a credit balance. So what has happened is, instead of carrying forward debit balance of 1526, it was carried forward as a credit balance. So that is the error. Correct. Now since nowadays we have a computerized system of accounting, all this balance carry forward errors will not happen. But since this example is given, let's see what is the impact of this error. Okay, now error and rectification. Okay, now let's say balance was 10,000. Now as on 31st December, balance is 10,000. Now what has happened is, debit balance of 1526 on previous day was carried forward as a credit balance. So instead of debit balance, it was carried forward as a credit balance. So what has happened? Because of this, your balance of 10,000 is showing to that extent is showing a lower amount of rupees 1526. So instead of, so here in errors what we'll do is 1526. So instead of debit balance, it has come as a credit balance. Correct. Now what is a rectification? What should be a correct entry? Actually the correct entry should be, it should have been carried forward as a debit balance of 1526. Correct. So now what is the impact? Now 10,000 minus 1526, comes to 88474. Okay, and the correct entry should have been 1526 on the debit side. So 11526. So to rectify the entry, what we need to do is, we need to add 11526 minus 8474. That is nothing but 3052. So if you calculate what is 3052, it's double of 1526. Okay, that is what we need to add. Okay, so we'll add mistake in balance wrongly carried forward as credit balance instead of debit balance. So what is the amount? 3052. Correct. Now the next. Of total checks amounting to rupees 11514 drawn in the last week of December, checks aggregating to 7815 were encashed. Now what has happened is, out of total checks drawn, okay, of 11574, only 7815 were encashed. So when the checks are drawn, immediately they are recorded in your bank account. Whereas in bank statement, the checks are recorded only when the checks are encashed. Okay, that is, checks are cleared. So there is no error in the cash book or bank account as per books for this entry. So this will go as a in your bank reconciliation statement. It won't be considered now. Okay, since there is no error, we need not rectify the balance in our bank account. Correct. Next, 6. Dividend of rupees 250 collected by bank and subscription of rupees 100 paid by bank were not recorded in the bank books of account. Now what has happened is, bank has collected a dividend of rupees 250 and subscription of rupees 100 is paid by bank. Now they are not recorded in the bank account. So usually this will be considered as a bank reconciliation item. But since we are closing the books on 31st December 2001, we need to pass all the pending entries. Okay, so this is one of the example of pending entries. Since the dividends are collected by the bank and subscription is paid by the bank, the same entry we need to pass in our books of accounts. Okay, so dividend of rupees 250 collected by bank, so amount has been received by the bank. So what will be the entry for this? The entry will be bank account debit to dividends account. So the debit balance of bank will increase. So what we'll do is, we'll add rupees 250. So this is not an error, but since we have not passed an entry, we need to pass an entry as on 31st December 2001. So entry will be dividend collected by bank. How much is the amount? 250. Similarly, subscription of rupees 100 is paid by bank. Okay, and subscription of rupees 100 is paid, but same entry we have not passed in our books of account. So what will be the entry? Subscription account debit, which is an expense, to bank account. So it's a payment entry. So when we say to bank account, we are crediting the bank account. So the given balance will reduce. So here we'll put it as subscription paid by bank. How much is that? 100. Okay. Now the 7th transaction. One outgoing check was recorded twice in the bank account. Again, this is an error, right? There was one outgoing check which was recorded twice in the bank account. So let's see what has been the impact of this error. And for rectification, in the sense what should have been the correct entry, and then now let's say the balance is 10,000 here on both the side. Now one outgoing check of how much? 350 rupees. Okay, has been recorded twice. So what has happened is, in our bank account, the amount has, the check issued of rupees 350, outgoing check is check issued of rupees 350 has been recorded twice. That is This is what has been done. Now what should have been the correct entry? Is only it has to be recorded once. So due to this, what has happened? 10,000 minus 350 minus 350, that is 700. So 10,000 minus 700, that is 9,300. So actual balance should have been 9,650. So what we are doing for rectifying the entry, we have to add rupees 350. So in addition, I'll write it as addition. Put it as check issued recorded twice, rupees 350. Okay, so that's it. All the transactions are considered. Only transaction number 5 that will be considered in our bank reconciliations. Now let's see what is a rectified balance here. Okay, so 100, 131, 100, that makes it 331. Okay, so I'll put it in the bracket since we have to reduce it. Then 150, 3052, 250 and 350. Let's see how much does it come. So this comes to 3802. So the final total, that is 8364 minus 331 plus 3802, that will come to how much? 11835. So that is a rectified balance. Rectified balance in bank account as on 31st December 2001. Now this balance we will be using for the purpose of bank reconciliation. Now this is a format of bank reconciliation statement as on 31st December 2001. Okay, since we are only given balance as per cash book which we have rectified, so we will be taking that balance. So rectified balance in bank account. Okay, so I'll put it as balance as per bank account. Okay, so we will take corrected balance. What is the balance here? It's 11,835. So I'll write it as 11,835. Now we'll see what are the bank reconciliation items. Okay. Okay, if we see only number 5, okay, point number 5, that is a bank reconciliation item. So of total checks amounting to 11,514 drawn in last week of December 2001, checks aggregating to 7,815 were encashed in December. So out of total checks that were drawn in the sense checks that were issued. Okay, so the out of total checks of 11,514 that were issued, only 7,815 were encashed in the bank. That is 7,815 are appearing in your bank statement. So we'll do a working. Okay, so now we are moving from our bank account to bank statement. So I'll put it as bank account and here I'll put it as bank statement. Okay, so as per bank account, we'll assume that there is a debit balance of say 20,000. Okay, and as for bank statement, same credit balance of 20,000. So what has happened is checks were issued of amount how much? We'll see it again. Checks issued were 11,514, but only 7,815 were encashed. So checks of 11,514, it will appear on the credit side of bank account since they are checks issued 11,514, and how much were encashed? 7,815. That is, only these parties have presented the check in the bank, 7,815. So we'll calculate the balance now. Okay, this comes to 8,486. Now bank statement, balance as per bank statement, 20,000 minus 7,815, that comes to 12,185. So that means we are going from bank account to bank statement, so we have to add, what we have to add? The difference, that is 12,185 minus 8,486. So that comes to 3,699. So here I'll put it as add checks issued but not presented. Correct? What is that? 3,699. Okay, so that's it. There was only one reconciliation item. So your balance as per passbook is 11,835 plus 3,699, that comes to 15,534. That is balance as per passbook or bank statement as on 31 December 2001. So that's it about this example of bank reconciliation. It also had some rectification entries and closing entries which needed to be passed in our bank account, and then subsequently we prepared a bank reconciliation statement. Thank you.